Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger. In this episode, we're going to take a deep dive into Avantis Funds. I've been asked from many folks my thoughts on these ETFs and mutual funds, so let's get right to it. The Avantis Funds were launched just a few years ago, 2019, so they've not been around for very long. And the first thing I want to point out is actually this right here, and specifically this. Avantis investors use financial science to build investment strategies that target higher expected returns. They also talk about the fact that their approach is academically based. I'll be honest, whenever I see financial science and academically based, all kinds of red flags go up for me. I think that's generally kind of nonsensical. Whenever I see sort of the financial engineering come out of Wall Street, good things don't result in the long term. I think you're probably just better off with low-cost index funds. Having said that, I do think there are some good things with Avantis funds that we'll look at, and I can see a place for these funds for some investors if they're trying to target certain asset classes, and we'll take a look at that as we go through the video. Now, as I mentioned, it was launched in 2019. Their chief investment officer is Eduardo Repetto, and you can see here he hails from Dimensional Fund Advisors, DFA. And for those of you that are familiar with DFA, you can think of it as sort of a factor-based index fund approach where they target certain asset classes. One example would be international small cap value, asset classes that are hard to get from other fund families. So now in the past, you had to go through an advisor to get DFA funds. And so as a result, I never did. I didn't want to pay the advisor fee. Today, DFA does offer some of their funds through ETFs. So if that's something that's of interest to you and you've been looking at, you would definitely want to look at Avantis as well, because it follows kind of a similar approach. And in some cases, their expense ratios are less, and I would say even in some cases significantly less than DFA. Now, I mentioned they started in 2019, and at the time, here were the five funds. They just had 5 ETFs. Some of them are explicitly value, as you can see this international small cap value. Others, like this US Equity ETF that we'll look at in more detail, are not. Now, if we go to the website, we can see that they've expanded their offerings significantly over the last 3 years. You can see now from 5 ETFs, they offer quite a few more. The one thing I want to point out over here, their expense ratios are low. The lowest is 15 basis points. I think the highest is 36. Now, these are not as low as sort of just a general broad-based index fund you might get from Vanguard or Fidelity that are just a couple of basis points, but still very inexpensive funds. Same is true with their more limited mutual fund offerings. They range as well 15 to 36 basis points. Now, as I mentioned, this sort of financial science, academically based, what does that mean? Well, if you dive into the prospectus, what you'll find are basically two things. They favor value and they favor smaller companies over larger companies. That doesn't mean they don't invest in large companies, they do. But when we look at their funds, they'll sort of start with an index as sort of the basis for the fund, but then they'll go in and make some changes. And what I've seen is they tend to tilt a little bit towards value and a little bit towards smaller companies. For the value tilt, their main focus is book value, although they do use other valuation metrics, at least according to their disclosures they do. But their main focus is on book value. Now, I want to take a look at 2 of their funds in a little more detail. And we're going to start with this fund. It's Avantis US Equity ETF. Again, from the name, it doesn't seem to focus on value at all. It is 15 basis points. Let's first take a look at their portfolio. What this fund does is it starts with the Russell 3000 index. And then, as I said, they do their own sort of factor analysis. And I've mentioned that they like value and small cap. Well, or I should say value and smaller companies. Well, if you look at the portfolio here, boy, it's neither value or it doesn't appear to be value or small cap, right? Or smaller companies. It's square within this blend category and square within the larger companies. But to really understand what they're doing, we need to compare this to a fund that truly tracks the Russell 3000. Fortunately, we have this Vanguard fund, And it's 10 basis points, so it's a little less expensive, 5 basis points. But if we go to the portfolio, we can see that a true Russell 3000 index fund is tilted towards the growth. It's still in the blend category, but it's right on the growth line. Again, if we go back to the Avantis fund, we can see, oh yeah, they do tilt towards value. Again, it's not a heavy tilt, they're not over here, but compared to the Russell 3000, they've moved it from right on the blend growth line to here. And they do favor slightly smaller companies, right? Here's the index, the Russell 3000. Here's the Avantis fund. Now, if we go to weights, we can see that tilt. We can see the mid and small cap companies here. And if we compare that to the Russell 3000 index, yeah, they still have small and mid cap companies, just not as much. And we can also see the tilt, again, it's not huge, but it's not dramatic, but it's slight tilt towards value. And we can see it here. Here's the PE of the Avantis fund, 13.6 and 17.3. Again, not a huge tilt, but a tilt. Market cap, 111 billion average for the Russell 3000, and for the Avantis fund, 62 billion. So that gives you sort of a sense of what they do. In this, again, this is just one of their many funds, but you see that slight tilt towards value and that slight tilt towards smaller companies. That raises the question, well, is that a good thing or not? Well, we don't really know. We've only got a couple of years of data. I can show you what that data looks like. Here's Portfolio Visualizer. Again, we're only going to get, 2.5 years worth of data. I've compared the two funds, and at least so far, it's actually the Vanguard fund has outperformed. A $10,000 investment over the last 2.5 years grows to 13 versus 11.3. You can see the compound annual growth rate. How do we read these numbers? Well, what's really telling for me is the year by year. In 2020, Vanguard's fund, the Russell 3000, really crushed Avantis. In 2021, it beat it handily. But in 2022, Avantis is actually beating the Russell 3000 handily. Still down, of course, almost 7%, but boy, that's better than being down 14%. How do we explain this? Well, in 2020 and 2021, that growth tilt that we see in the Russell 3000 really paid off. In 2022, as interest rates have risen significantly, you see value stocks, while still losing ground, don't lose nearly as much generally. So that slight value tilt in the Avantis fund, I think, has paid off. And so that kind of really gets us to what I think is Avantis's strong suit if you want it, and it's a tilt towards value. Now, of course, you can get a value tilt through Vanguard funds. They offer value-based funds, so to say, a Fidelity. But Avantis may give you a value tilt that you either can't get from other fund families, or you simply want it, like for example here in the Russell 3000 versus, say, just a value tilt for large cap funds generally. The one thing I'll stress is that as long-term investors, we have to recognize, we can go back to the chart, that we're going to have periods like this, where if we invest in an Avantis fund, it's going to significantly underperform the market. And so you have to answer for yourself, can you stick with these funds during markets like this? If the answer is no, I think Avantis should have no place in a portfolio, in my opinion. You should stick with just sort of more, I call them generic index funds that simply track an index without all of the financial science, right? But if you believe very strongly in the approach that Avantis is taking, then it might offer a place, I think a small place in a portfolio. Now, let's look at one other example, and it's the International Small Cap Value Fund. The reason I pick this is because this kind of fund is very difficult to find in other fund families. So let's actually go to the quote page first. Now, I'll say Vanguard, for example, doesn't offer a comparable fund. These funds do tend to be more expensive because of the asset class they're targeting. This is 36 basis points. And if we go to the portfolio, we'll see, first of all, it is an international fund. It is in the small to mid cap range, according to Morningstar, very much a value fund. We can look at their weight, and it's squarely within that value, sort of small to mid cap asset class. We can see price to earnings very low, but again, it's in part because it's international, which are generally lower than U.S. stocks. And it's also, of course, tilted to value. And we can look at their market cap. These are very small companies. Now, as I mentioned, Vanguard doesn't offer this kind of fund, but DFA does. So we can actually compare this to the DFA International Small Cap Value 1. Now, this is a mutual fund that we're comparing, but for our purposes, I think that's fine. You can see it's slightly more expensive. Not a huge difference, but it's 42 basis points. If we go to the portfolio, we'll see that it's very similar. Again, we can come back here and compare it to Avantis. It's very similar, maybe slightly more value tilt, slightly smaller, but again, the PE is 7.6, market cap is 146. So these are very comparable funds. Frankly, between the two, I'd probably pick Avantis just because it's less money. But long term, I would expect these funds to perform similarly. Now, again, we don't have a lot of data, but if we look at the data we have, again, only 2.5 years, they're basically neck and neck. I guess Avantis has outperformed by a couple $100 in part, and maybe the expense ratio. But if we look at it year by year, it's interesting. Avantis really outperformed in 2020, but underperformed in 2021 and is actually underperforming, again, a little bit this year. Again, we have very little data, but long term, I would expect these two to be comparable. And so having said all of that, where does that leave us with Avantis funds? Well, my view is this. For a core portfolio, I wouldn't use Avantis funds. I don't want financial science to interfere with my index funds. So I'm not going to use Avantis funds as a core portion of my portfolio. And in fact, I generally don't feel that I need to tilt my portfolio the way that Avantis, or for that matter, DFA, tilts their funds. However, I know that some of you do want to do that. Some of you really want, for example, international small cap value. And if that's the case, in the past, DFA has been one of the only options for you. Now Avantis is an option. And so if it's got the specific fund that targets a very unique asset class that you're wanting exposure to, I think Avantis is worth considering. I will say, though, that even if I were going to do that, I wouldn't tilt a very significant part of my portfolio in that direction. Again, as an example, international small cap value. And the thing I would always remember is these funds could and probably will underperform their comparable indexes over periods of time. Even if in the long term they do very well, you have to be prepared for that, and you have to be prepared to stick with the funds for the long term. And I think a lot of folks, that's going to be very hard to do. So again, for me, I'm not going to invest in Avantis funds. It's not that I think they're bad funds. I do generally like their approach to investing, and they are low fees. I just find them, frankly, just unnecessary. So that's my take on it. If you have any questions, leave them in the comments below. Be happy to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.